Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show where we look at what happened in the market during the day and how we can plan for a better trade for the next day. So we had a big day, we had a volatile day in the Nifty. The global cues was what the market was looking at and it was bad. But the banks are showing strength. Let's get into the details of the analysis. So it's pre-market analysis is for tomorrow, April 26th, Tuesday, 2022, an expiry week. Actually, monthly expiry week, and our analysis would be based on all these parameters that you see on the screen, and we would also have some wrap-up and actionables as well, right? Let's get into and see price action. So we had a pro gap, bearish pro gap that was formed today. Clear downtrend, clear bearishness is evident, right? And Banknifty, you had a similar gap down, but it recovered and then showed its strength, right? So here you can see that both indices have given up all the major moving average support zones. So 200 EMA is gone, 20 EMA is gone, both indices, right? That's what we have. And we also have a new resistance on the case of Nifty. So two resistance on the upside right now, right? So intraday price action, if you see, it was a gap down and then it was very volatile. Banknifty also gap down, very volatile, but Banknifty after the 1.5% of gap down recovered more than one, nearly 2% from the downside, right? But Nifty could not do that, right? It could not. So it closed how many points down? So the number is 218 points. Lost in the Nifty, 1.2% down, right? 17K is gone, 200 DMA is gone, 20 DMA is gone, and we are back to the trend line channel from where we broke out and could not sustain. Banknifty also we ended up not down, back in the trend line channel. Top the prices were not the same. So, but remember that it had recovered and then ended up 0.1%, up 38 points. But it shows some strength, right? Intraday was gap down. We had seen that 1% down on Nifty, 1.3% down on Nifty, but Nifty recovered. Bollinger Bands clear consolidation. You can see here, right? But bearish bias because prices at a crucial point. So any breakdown from here would turn the expansion of the bands and then bearishness would start. But right now it is at a crucial point, sideways, and if there is a move up and then further up, then it means on a daily charts it will be consolidation that may be happening. But as of now, it's clear sideways movement is what you can see with the bearish bias on the Nifty. Banknifty also sideways momentum also is showing the same. So let's look at the sideways support resistance levels. Right now the immediate support for the Nifty on the left side, you can see 17,000, 1750, then 17,200. It's a gap resistance that was formed today that would act as a major resistance before conquering the 17,200, 300, and above that you have 17,350, 17,400, and then 17,500, 17,600, which is the Fibonacci 23 retracement. Above that you have 17,800, 17,850. Downside similarly the supports would be 16,800, 16,900, Fibonacci 38,000. It's set for here right now. Below that 16,700, 16,750, 16,550, 16,650. Then you have another gap support that is there, 16,350, 16,450. That's a Fibonacci 50 retracement level also. That's how it is on Nifty. Nifty, right? Nifty, the middle support can be seen at 35,900 near to 36,000 kind of levels, right? And if that support is gone, then you can fall back to 35,000 nearby levels, which will match 50 retracement levels. So downside, if that falls, then you come to 34,750 levels and 34,000 levels. After that, it's a nice 61 retracement. You have support also there. Resistance on the upside, 36,800 Fibonacci, 38 retracement the first one, then 36,900, 37,000, then above that 37,500 Fibonacci 20 retracement level, above that 37,700, 800 level, then 38,000. These are the resistance on the upside, and downside supports we are already seen. That's Banknifty for you. No divergence of the momentum, but momentum is sideways. On both indices it is sideways, you can see. And here also sideways, and it is falling strength sideways on the short term. But medium term also is sideways. So trend you can see it's bearish using the ADX indicator. The DMI negative is what is rising. Rising strength bearishness in the short term, but medium term also it's bearish, but it is not rising strength. That's also overall trend remains bearish and momentum remains sideways. Already shot up 16% and now let's hit 21.25, about 20 again, right? So be cautious. Back volatility of Nifty also is 20.858 and in back volatility percentile is 81%, back to the old times again, right? So be cautious. That's what you saw in market. It was highly volatile, trending downfall, and some downfall and then highly volatile up moves. What happened in Banknifty, right? So volatility is back with the bank. So open interest analysis, if you see, there are a few more days for the monthly expiry. Is Thursday, for 3-4 days ahead. Some unwinding is in the call side, as you can see, but overall support resistance level, that's very wide apart, right? Nearly 2,000 points. 16,000 to 17,800 is where the highest put and call rating is seen. Then 17,000 and 17,500 is where the next level of put and call rating is seen. 36,000 and 37,000 is the highest put and call rating in the Banknifty. 35,500 and 36,500 is where the second level of highest put and call rating, support and resistance are seen. So that's a wide range. Still, market is, the option writers are indecisive. They've given a very wide range as of now. Put call ratio is showing there is some bullishness, closer to bullishness, not real bullishness, closer to bullishness in the Banknifty, and not enough bullishness on the 0.65 on the Nifty. It has to be above 1 to be sure, clear bullishness, right? That's not there. But our futures open interest rate is showing a long build-up that happened, and options open interest showing a short build-up. So it's opposite, right? Banknifty is not showing. Banknifty is showing long build-up that happened, and Nifty is showing short build-up that happened. So contra. So next days will show that what will support what. So the heat map, if you see, it's red all over. The HDFC and ICICI Bank both were doing good. HDFC Twins also, but Lions which that was holding the market and was giving good up moves, has now given up and it is closed deep red. All sectors across the sector selling happened today, and it was not this clearly bearishness, even when the banks did perform well. Index aggregates, if you see, HDFC Bank is shown green, simply consolidating and taking support, right? And sideways momentum is what it is attempting to climb into from the momentum perspective. And HDFC, just like HDFC Bank, is also closing green and attempting to get back to the sideways zone from the bearish zone where it had fallen earlier. So overall green candles can be seen on the heavyweight HDFC Bank after a long time. And but on the contrary, Reliance, which is holding the market, has given up. Probably profit booking. It had done a very good up move, and is still continue to be in the bullish zones, and momentum is still above 60. So it's clearly bullish, but it is a retracement will happen. So hopefully that retracement may be done with at this level, and then may consolidate and then further make another up move. Unless the momentum falls back to the sideways again, right? So Infi also is a down day. Infi had been down day because market is down, then obviously. And for IT stocks will go down, and it's clearly in the bearish zones. You can see that. So there is no stopping to that, because Dow Jones was down nearly 900 points yesterday. So Tata Consultancy TCS is also seems to be falling down from the edge of the trend line where it was holding on. It may be falling down back to the support zone where it is taking a bounce earlier, several weeks before. But it has climbed and maintaining the sideways momentum and not in the bearish momentum like Infosys, right? ICICI Bank, you can see, it's trying to close green. Alright, it is after the results because of today's downfall. Even when the results were good, it could not climb and maintain the momentum in the bullish zones. It is in the sideways fallen. We have to watch and see where it's climbing. But overall, it is attempting a green trade today. Kodak Bank also is taking a support at the major support zone, and it seems to be not ready to go down, but momentum is in the sideways. So consolidation is clearly seen on that. Kodak Bank, HDFC has done well. So banks overall has done well today. IIT obviously has done bad, and the major guy who was holding the lens has given up a hold and retraced. Sectoral performance, all the sector we have seen that it is not doing good, right? 2% down IT, metal 2%, 3% down, auto 1% down, pharma 2% down, FMCG 1.6% down, reality is nearly 4% down. So it's big downfalls that you see all, and reality is now turning to bearish along with the IT. So IT is bearish, reality also, where real estate stocks are all getting into the bearish zones on the short term. Medium term it is sideways in both. But in the IT, not both. IT sector, medium term also has turned now bearish. So overall bearish must stay away from it. Others which are sideways momentum in the short term is metal, auto, pharma and FMCG, but they are only short term sideways. Medium term also it has to be sideways before we can take any confident bet. So for now, sectoral picks may not happen. Means pick the stocks in the highest performing sector. That method may not work right now because no sector is clearly bullish for long trades. Institutional participation data has not come in. We'll just quickly have a look and see whether data has come in or not. No, data has not come in. Yesterday we had 2,000 crores and from the Fyers selling. I would believe that it may be even burst today, right? From the Fyers side, we'll have to check that data comes. Dealers obviously might have done its job of buying, but that may not be enough. So institutional participation will need to be worry, and US dollar is shot up to near to 77 levels, right? It's making another another all-time high. Looks like heading towards that. So high momentum. Rupees weakened to the post level. No intervention from the central bank seems to be happening. Not sure why, but yeah. And look at dollar index. Dollar index is shot up, and then seems to be hitting the next resistance at 103 very soon. So it's a clear bullishness that you can see in the dollar. So US dollar is rising like anything. There is no way that rupee can hold. Right? So rupee weakening is a worry. Global indices, if you see the big fall of the Dow Jones is what you see, 900 points down fall. Straight away from the top of the bullish zones, it has come to reach the bottom of the bullish zones, right? It may be taking the support at that zone, but yeah, because it's a very crucial support. So any breaking down further from this support zone is what we have to watch out. Right, you can see that Nasdaq also has fallen and given up the major support zone, and now back to the same zone where it has taken, which is another major support. So whether it is breaching down below this, what you have to see. But the difference between Dow and Nasdaq is that it is showing that it is momentum has slipped down into the bearish zones. Right? It's not just Nasdaq, and S&P 500 also momentum has slipped down, and the support, major support from where it had bounced earlier, is also seems to be a threat. Right, so it's suddenly become highly volatile and big downfall has happened in the US market. You have to be really cautious, because there's no way that we can be trending up and up when the global markets are down. So you have to be really cautious. We can expect a downfall. Crude oil is falling down below 100 after a long time, so that's good news. At least some relief, we can say. Gold is also not rising up as we expect when markets fall. So it is taking this close green and at a support low. So whether it is falling below this 40 is what you have to see. If that is falling, then it may be going back to it may not be able to hold this zone from where it had attempted a very good breakout earlier. So gold seems to be consolidating and well at the support zone. Whether the support is breached or not, keep a close watch on gold. But crude has cooled off. Right? Crude cooled off. Gold dipping, but rupee steady falling. Rupee is steady high because US dollar is rising high and US markets are down. So it's a mix back. Two action was Tech Mahindra. IT stocks anyway down. Sector wise it's down, but the stock seems to be correcting well within the trend line channel downfall. That's why happening. Very good supports are there at this zone at 112, 1150. That zone. Before that there is a gap support also. So should not take risk. It may come down, and at least till here you can have a swing trade for sure. HDFC Life Insurance is also bearish and resisting below 40 is the reason, and it is having a very good parallel channel downtrend that's happening. It has taken a bounce from here, but seems definitely to fall back to these 490 zones back again. HDFC Life, right? It's because it seems to be failing, right? High volumes and bearish momentum, bearish trend. This is on the weekly, but you'll have to see this on the daily charts. Both are on the weekly, so make a note of that. So Tech Mahindra, short call. HDFC Life Insurance, short call. Wrap up moderate bearish is what I have short term view, market view is that. Reasons, we already seen reasons. Chart pattern shows bearishness. Support resistance show. Chart pattern shows sideways momentum only. Sideways movement, and momentum also is sideways, but trend is clearly bearish, right? On the edge, if I and Bollinger Bands and momentum. So volatility and momentum is still in the sideways, not a turn to the bearishness. Volatile expansion and the moving momentum, but price action and support resistance levels are shouting out that there is likelihood of falling down further. So we have to keep a close watch. So all the gains of 15-20% of recovery that happened in both indices is gone now. It has fallen back to the channel. And overall, we know it is consolidation as of today. Tomorrow we don't know. Right? Bollinger Bands is still shouting at us from the charts and saying that yes, it's still consolidating, but it's on the edge. Anytime can expand on downside bands. Because US markets, are clearly bullish 900 points single day. So you have to be really cautious. Fyers seems to be selling very aggressively every day. Even today, they might have done big selling. Only the crude is also, very close to the 100 level. So weak rupee is the biggest threat. Global Q is not good enough. So any bullishness if you have to look at is only about 17,500, 37,500, and then 18,350, 39,400. That levels, right? Downside 16,400 and 34,000. Be cautious. If that breaches, then we may have bigger crashes that can happen. Until then, it may be consolidating still. So war is still going on. Volatility, due to Fed hikes, is what we are seeing last 2 days, so 2 or 3 days. But there is also a war, so that volatility and this volatility can mix up and then it can shoot up back to the 30 levels. It's possible. So be cautious. Don't carry forward trades overnight without hedge positions. Right? FIs continue selling. Weeks is high. So positive factor if you see. Not much as of now, except that we had a good downfall even during the war. But that uncertainty is still there in the market, and along with the economic reasons, so you have to be really cautious, right? So options traders, stay away until it cools off below 20. Stay away from taking trades, speculative trades. Long people who have long investments, take hedges and alternate instruments or option strategies. If you don't know, check the other videos in the playlist and you'll find them. And intraday traders just have to have tight stop loss and watch it closer. The candlestick patterns to identify when the V-shaped moves are happening, and trail the stop losses. Right, that's all you can do. The best option will be to stay away to protect your money. Right, if you're playing the game, then stick to the rules. So that's a market view for the next day. Moderate bearishness, right, and that's based on all that we had studied in the last several slides. So I believe that must have given you an idea how to form your market view for the next day, and I hope that also may have helped you to have a trade plan for the next day. So if that helps you in some way, please consider hitting the like button and share it to your friends, colleagues, everyone. We have very few subscriptions and appreciate your helps in this regard. Thanks for watching. Happy trading, happy learning, happy investing. Bye.